5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. More deals incoming. Elon Musk's xAI is said to be raising more financing to lift its funding round to $20 billion. Nvidia, a major backer. A golden milestone. Gold smashes through $4,000 for the first time as the U.S. shutdown fuels that rally. And President Trump threatens to block back pay for furloughed federal workers when the government reopens. Now, it did start to look a little bit ugly at one point yesterday, but at the end of the day, we were only down 0.4% in the S&P 500 and a little bit more than that, just more than 0.5% on the Nasdaq 100. The tech sector did see the brunt of it, with semis selling off about 2%. But look, as you can see, we're back today with futures pointed to higher opens right across the board. Yields were a little bit lower as well. We had the 30-year down to 470 this morning. And obviously, the VIX is above 17. We have gold through 4,000. There is a safety trade on, but it's not clear that it's displacing the risk-on trade. I mean, I guess you can have both on at once. At some point, the market will start to look to economic fundamentals again, as opposed to these AI deals. And at that point, there may be some problems. Paul Donovan of UBS this morning saying if Trump follows through, and if he's allowed to follow through with the no back pay for furloughed workers, well, that will reduce the bounce back that we would normally expect to see once the government reopens, and that could have a major impact. All right, well, with all that said, let's get across to London now for some individual equity movers and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with the AI space. Some more data infrastructure companies making the headlines this morning. The recent one is Confluent. We've had a Reuters report that they've become a takeover target. Now, this is a data center company that has some useful technology behind it. And, Bonnie, it has been highly speculated as a takeover target after the stock dived back in July after they lost a key customer. But take a look at the move this morning, up nearly 20% for Confluent. Let's move on to yet another data infrastructure company. This one actually used to be a Bitcoin miner, Iron. It is down so far in pre-market trade off the back of it announcing a convertible bond offering in order to finance its latest moves into its AI cloud infrastructure business. So we're seeing shares of Iron down 3.25%. But this is very topical, Vonnie, as these data AI infrastructure companies such as Oracle use debt financing in order to support their next round of expansion. Lastly, I want to head over to Germany, talk about BMW. Those shares are declining today. The worst performer in the Euro Stoxx 600, BMW down 8.6%. This is on the back of a guidance cut when it comes to weak China sales. They also cited some issues with tariffs on their plate, and it comes just a day after that Mercedes and BMW slashed their unit car sales in China off the back of fierce competition from the likes of BYD and Xiaomi. Vonnie?
Markets certainly punishing that stock. Valerie, thank you so much. Valerie Teitel there. And later this hour, we're going to catch up with BlackRock's Wei Li on the AI-powered equity rally. But first, a Bloomberg scoop. Elon Musk's xAI is raising more financing than planned after backers, including Nvidia, boosted its ongoing funding round to $20 billion. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, it looks like the equity portion is just $2 billion on Nvidia's part. I'm saying just, because it's promised hundreds of billions of dollars to other players. So could this be considered even a reasonable investment, maybe?
Well, I guess time will tell if it's a reasonable investment, but clearly, that this kind of very much follows the playbook that Nvidia is using right now to invest in companies that are ultimately customers of their GPU chips are used for AI. So it kind of fits very much that mold. I think it does also kind of fit this kind of theme of, this kind of slight circularity we're seeing in the market right now in these deals. This is a relatively small deal to some of the ones we've seen. And the way this is structured is that xAI is going to set up a special purpose vehicle that will buy the chips and then rent them to xAI for its use in one of its big data centers called Colossus 2. There's quite a few steps in this market, and again, ultimately we're kind of looking for kind of what I describe as natural demand to come through from the enterprise market and the consumer market to kind of really make a lot of these deals make sense over the midterm. This deal in particular is set up as a 5-year deal. There is a lot of kind of more straightforward financing there, debt finance from investors. So, I think that this deal feels a little bit cleaner than some of the other ones we've seen, but still question marks about where the natural demand is coming from.
So, Matt, you mentioned the word circularity. Some would say that these deals are nefariously propping up this market somehow, but others would say that it's really just a form of vertical integration. I mean, can it be both?
Yeah, I mean, I think at the moment it does seem a little bit like a mix of two. You know, we've seen investments go both ways. Obviously, the one that raised the eyebrows was OpenAI's investment into AMD. Yeah, I think essentially these companies are essentially trying to get the flywheel going or keep the flywheel going whilst we wait for that kind of real natural demand to come through. You know, right now most people are kind of using free versions of AI services. Enterprises are investing, but you know, we're still at the very early stage of that, so the kind of real revenue opportunities yet to kind of really come through. And I think on the consumer side, it really needs a kind of big shift in the ad-funded models we see for things like Google right now, and that's nowhere near starting. So I think there are lots of question marks there, and I think a lot of people are going to start to look more closely at the balance sheets of some of these companies, particularly like Nvidia, just kind of see whether there's a kind of a match-up between the revenue and profits they're reporting and the cash flow that they're actually generating in the near term.
Matt, thank you so much. That's Matt Bloxham there of Bloomberg Intelligence. Over in Washington, President Trump threatening no back pay for certain federal workers when the government reopens. Speaker Mike Johnson spoke about the issue yesterday.
There are some legal analysts who are saying that that may not be appropriate or necessary in terms of the law requiring that back pay be provided. So I'm sure that'll be there will be a lot of discussion about that. But there are legal analysts who think that that is not something that government should do. That, if that is true, that should turn up the urgency and the necessity of the Democrats doing the right thing here.
Joining us now is Bloomberg's Suzanne Lynch. Suzanne, is the president going a little step too far with this particular suggestion? It would surely be challenged legally and also be extremely unpopular.
Yes, very interesting here to hear there Speaker Mike Johnson discussing that on that clip you just played there. I mean, Republicans are probably getting nervous at this point, at this language coming from the White House, from the Budget Office and Donald Trump himself about the possibility of this pay being cut in some way. I mean, some of the Republican leaders who are negotiating on this current bill are the very ones who backed previous legislation protecting federal workers in terms of pay in the event of a shutdown. So they're presumably not happy with some of the threats that are coming out of the White House. So you could hear there the Speaker saying that it's up to Democrats to move this shutdown forward. We're now a week on in this shutdown, but also pointing to some divisions within Donald Trump's own party about how the president, about how the Republican Party are handling this.
And then, Suzanne, I want to ask you about the story just dropping on the Bloomberg terminal moments ago. The EU is seeing the new US trade demands hollowing out the deals struck by President Trump. Now, this had been, hallowed as a fantastic deal, a 15% across the board tariff. But now the EU is talking about these digital technology rules, corporate compliance and climate regulations hollowing this deal out. This is concerning.
Yes, this has always been the fear. As we know, Donald Trump and Ursula von der Leyen, the head of the European Commission, sealed a trade deal back in July in Scotland with a 15% ceiling on tariffs for most goods. Now, even though there was some pushback to that deal, EU countries swallowed it and thought it was the best they could get, essentially, at that time. Now we are reporting just in the last few moments that there is now concern in Brussels about the sanctity of that deal. We expect that EU ambassadors in Brussels will be briefed by the European Commission later today on some feedback and some discussions they've been having with the US side. And as you mentioned there, the fear is that the US wants to change the goalposts, as it were, on some issues in this trade deal, mainly on digital regulation. This has long been a bugbear of a success of US governments, but particularly of Donald Trump, that EU regulation on big tech is too onerous. So that's one issue that seems to have emerged now as a concern, but also EU rules around environmental laws, for example, climate. So we do expect, as I say, EU countries to be briefed on this later today in Brussels, but definitely a fear about the next stage in these EU-US trade negotiations.
Absolutely. A concerning development. Can I also ask you about the Middle East? So we have teams from the US, Qatar, Israel and other nations headed to Egypt as part of a final push for this deal with Hamas. Do we have any updates?
Well, there is a sense that this is really a moment where a peace deal could get over the line in some way. Obviously, we've just passed the 2-year anniversary of the Hamas attacks on Israel, and there does seem to be momentum. As you mentioned there, some of those senior US figures now on their way to Egypt, to Sharm el-Sheikh for these talks, including the president's son-in-law, Jared Kushner, but also other significant figures. There, for example, the Qatari Prime Minister, a very important figure here. So I think what we're hearing is that the focus at the moment currently is on the remaining hostages, that they are released. But what Hamas will demand in return, of course, is the key question. Is it going to be more about their own prisoner release, about the withdrawal of the IDF, for example, and when that might take place? So these are the outstanding issues now as we enter a kind of key moment in these potential peace talks.
Suzanne, thank you so much. That is Suzanne Lynch there for us. Now to France. Outgoing Prime Minister Sébastien Lecornu expressed optimism just this morning that an accord can be reached to allow the formation of a new government. Joining us now from Paris is Bloomberg's Julien Pontus. Julien, why the optimism? He certainly didn't have it when he resigned not that many hours ago.
Yes, it's a bit surprising because the markets are really looking at the glass half full at the moment. Lecornu said there was PM Lecornu said there was a path to avoid snap elections, and that he was holding talks with political leaders during the day. He will address the nation in the evening with a televised interview. He said he would report back to Macron at the end of the day, and so there's hope that actually, snap elections could be avoided, that Macron will not resign, and that in the end everything will go back into place. So now it's really not a done deal.
Yeah, and part of it has to do with rethinking a pension law, which was controversial, particularly for the socialists. How would that change, and would it bring the backing of the socialists?
So yes, it could bring back the backing of the socialists to some extent. They also want some kind of a wealth tax. They also want something to boost wages. But the problem is it's a landmark reform of Macron and his allies. And if they agree to suspend it, there's a good chance that a lot of people within Macron's party will be very angry about that, because that reform was so unpopular. They had to defend it in the constituency. They were spat at. There were, it was difficult for them. So, and plus, there's also the key fact that if you suspend that reform, rating agency, a lot of international investors will start looking at France and maybe changing their view over the middle, long-term prospects of France's public finances.
Well, the spread between OATs and bunds now just about 3 basis points lower, so not that much different, but maybe a tiny bit of optimism, as you say. That is Bloomberg's Julien Pontus in Paris. Thank you. Now to other top stories trending on the terminal this morning. A regulatory standoff in the EU and the UK. Regulators there are walking back measures that forced money managers to separate the cost of research from that of trading. Money managers, however, are reluctant to rebundle, undermining any chance the U-turn in rules could have of reinvigorating investment research in the region. UK borrowing in the first 5 months of the year was $2.7 billion lower than previously thought. According to the Office for National Statistics, the tax office found an error in its VAT receipt data. Despite the error, Chancellor Rachel Reeves still has a large fiscal hole to fill in her upcoming budget. ASM shares fell after US lawmakers accused the Dutch chip equipment maker of boosting China's semiconductor industry, raising the spectre of further export controls on ASML's lithography machines. Well, coming up, we'll bring you our conversation with Stanford Senior Fellow Neil Ferguson on the impact of a prolonged government shutdown. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. We are entering day 8 of the federal government shutdown as the standoff between Republicans and Democrats continues. Stanford University senior fellow Neil Ferguson spoke to Bloomberg's Danny Berger at the Citadel Future of Global Markets conference in New York about the potential impacts. Have a listen.
I'm not going to try to second guess what the congressional leaderships are going to do. But I think if you look at the latest news, on one side, President Trump signaled that he might be open to some kind of negotiation about the healthcare subsidies. On the other side, it seems like the White House is talking about not paying back pay to furloughed workers. So I'm not sure whether that is pointing towards compromise or confrontation, but I'm going to say confrontation. I think this ends up going on a little longer than people were thinking when it began, right at the beginning of October. What that means, I think, is that we see the parties squaring off. I'd call this the first inning of the midterm campaign of 2026, each trying to get the advantage in the public mind, each trying to get the other to be blamed for the shutdown, because shutdowns are not popular. But it's not clear to me who's going to win that game at this point.
If we are talking then about this being protracted and permanent layoffs, not paying back furloughed workers, is the economy in a place where it can handle that? Does it change the economic outcome of a shutdown? Considering we're already starting from a place that many would say is one of fragility.
It's already an economy that's slowing down. If you look at the latest data Bank of America just released on the labor market, you can see the cooling happening. Now, it's hard to say where that leads us because next year there are some reasons to expect some fiscal tailwinds. But I think if you had a shutdown that lasted more than a week, and that's now very likely, that's another headwind for the end of 2025. And if one takes a step back and asks, how are we doing? The other thing that's still, I think, filtering through to consumers is the cost of the tariffs, which has been drip-fed by companies, hasn't hit all at once, but is, I think, going to be perceptible as the fall unfolds.
And that was Neil Ferguson, senior fellow at Stanford's Hoover Institution, speaking to Bloomberg's Danny Berger. Coming up, Cristiano Ronaldo becomes football's first billionaire. We're going to his hometown of Lisbon for more next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Wall Street Journal, Hyundai gets the cold shoulder from the Trump administration. That's despite a series of aggressive moves to deepen ties to the United States. The raid on its Georgia facility last month was one of the high-profile examples of the U.S. cracking down on a company while also trying to secure investment. Next up on the Financial Times, OpenAI and Anthropic are considering using investor funds to settle potential claims from multi-billion-dollar lawsuits. It comes as insurers are balking at the prospect of providing comprehensive coverage for the risks associated with artificial intelligence. And on the Bloomberg, Cristiano Ronaldo becomes the first football billionaire. According to the Bloomberg Billionaires Index, his net worth has now climbed to $1.4 billion. Joining us is Bloomberg's Portugal Bureau Chief Sofia Horta Acosta. Sofia, how has Ronaldo amassed his wealth? I mean, he's obviously an amazing footballer.
Good morning, Bonnie. And that's actually how he's done it. It's quite unique among the world's richest athletes that Ronaldo has amassed the majority of his fortune on the pitch rather than through sponsorship deals, like Michael Jordan, or through the ownership of lucrative companies like for tennis star Roger Federer. So it's quite unique. And also the majority of that came at the twilight of his career when he moved to Saudi Arabia 2 years ago. So it really shows that even at the late stage of your career, he's now 40 years old, you can be making the majority of your money. It also helps that Saudi Arabia has zero income tax, Vonnie, which is obviously a huge difference compared to the 48% rate he would face here in Portugal.
Yeah, absolutely. I just want to say, for context, when David Beckham retired back in 2013, he had made $100 million. Now, his fortune is obviously much, much bigger than that too. But where do we know does Ronaldo invest his money, Sophia?
So that's what's quite strange about Ronaldo, is that he's not very I want to say organized, but I'll say deliberate in how he invests. He does tend to favor his home country. He has very small investments in a ceramics company. He likes paddles, so he invested in a paddle company here as well. Also a hair loss company and a hotel chain that's based in his home island of Madeira. And he works very closely with a few select friends and close people that have been with him for a long time. One of them is Miguel Marques, who's based just up the road from where I am now in Lisbon. And he is said to really lean on Miguel Marques for managing his money. But when you do ask Ronaldo what he does, what he plans to do after he retires, he gets quite angry about it because, you know, he says, I'm still a football player. I'm nowhere near retiring.
Yes.
And we'll talk about that later.
Okay, I'm sure we will as well. Sophia, thank you so much. Sophia Orta Acosta. Coming up, we'll speak with Wei Li on the Fed's room to ease policy and whether it'll keep this risk-on sentiment driving. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. More deals incoming. Elon Musk's xAI said to be raising more financing to lift its funding round to $20 billion. Nvidia, a major backer. A golden milestone. Gold smashes through $4,000 for the first time as the U.S. shutdown fuels its rally. And President Trump threatening no back pay for some furloughed federal workers when the government reopens. Let's take a look at these markets because it did turn a little ugly yesterday. We finished the session with semis down about 2%, but the rest of the market down, 0.4% on the S&P, just more than 0.5% on the Nasdaq 100. The VIX topped 17 yesterday. It's back below that this morning. Not too much movement in yields. We're seeing the 10-year yield just down a basis point at 4.1113, 4.7085 just then. And we are seeing gold smash through $4,035 right now, up $50. Even Bitcoin is rallying by about 0.5% this morning. It's above 122,500. So we are seeing a little bit of a safety trade, but very much the risk-on trade continuing as well. We'll break it all down in a moment with Wei Li, but let's get to some individual movers to watch now with Valerie Teitel in London. Valerie.
Good morning, Ivani. Let's start in the data center space. It is heating up. Confluent, a data center company, Reuters reporting they've become a takeover target. Those shares are rising 18.5% in pre-market trade. Now, Ivani, this stock did dive back in July after they lost a key customer, but there is still some decent technology behind them. So they've been rumored to be a takeover target ever since then. They have some decent technology when it comes to managing real-time data streams for AI. So that stock Confluent in the green as a takeover target on the Reuters report. Staying in the data center space, let's talk about Iron. This is another data infrastructure company. Used to be a Bitcoin miner, now has some AI cloud contracts. Those stock is down in pre-market, down 4.25%. They announced a convertible debt offering in order to raise financing for their next data center build out. Now, Vani, this has been topical of late. We are seeing more data infrastructure companies issue debt in order to finance the next stage of their build out, and Iron is no different with that stock in the red after that announcement. Lastly, let's head over to Germany. BMW, the worst performing stock in the Euro Stoxx 600 this morning, down 9.3%. This is after they cut their guidance on weak China sales, also cited some issues when it came to tariffs, but it just comes a day after both Volkswagen and BMW marked down their unit sales to China, both experiencing some pretty steep competition from the likes of BYD and Xiaomi in that region. Bonnie?
Valerie, thank you so much. Valerie Teitel. I do want to bring you some headlines just crossing the Bloomberg right now from the Bank of England's FPC meeting minutes held October 2nd. Interesting because there was a lot of discussion about the United States and valuations, equity valuations appear stretched, notably for AI firms was one of the statements. There's an increased risk of a high impact event. The Bank of England also thinks the threat to Fed credibility could trigger sharp repricing. So this is all to do with the US equity market, remember. The BOE also saying that US auto defaults show risks from high leverage and saying that there's a material risk of spillovers to the United Kingdom. So some sharp commentary there from the Bank of England on US equity pricing. We're just going to speak about it because as the AI deal announcements keep coming, alongside more warnings now of frothiness in US markets, BlackRock is maintaining its risk-on posture. Wei Li writes this. Our pro-risk stance hinges on signs that a cooling labour market spurs more Fed rate cuts. We think rate cuts amid a notable slowing of activity without recession should support US stocks and the AI theme. I'm pleased to say Wei joins us now. She's Global Chief Investment Strategist at BlackRock. Wei, I mean, this is pretty unprecedented, I would have thought. The Bank of England saying so much about the details of what's going on in the US equity market, talking about auto loan defaults and stretched AI valuations. What do you make of this? The BOE clearly concerned about all of these risks and the spillover effects that it could have in the United Kingdom.
Good morning, Vonnie. It's not just the BOE. I'm picking up more concerns around some of the circular financing and financing of balance sheet in the AI ecosystem as well. But I think it's important to remember that the big picture is that the majority of the CapEx activities and commitment so far has been in the hyperscaler space. And the hyperscalers, they have a lot of cash on their book and they are not leveraged at all. So, you know, as we think about them starting to get leveraged up, it creates a significant runway for build out. And the fact that this time around the capex activities has not been accompanied by a significant increase in leverage is very different from previous capex booms. And another big difference versus previous capex boom is that earnings are coming through, right? So you talked about valuation concerns, but earnings have come through so much so far this year that if you look at Magnificent Seven, currently at 34 times forward PE, is slightly lower compared to valuation at the beginning of the year. So, you know, am I worried about overcapacity build in the AI ecosystem? Yes, I am. Especially in the context of the depreciation cycle for chips can be shorter compared to some of the other infrastructure build out. But I think it all boils down to the big question, which is, will AI bring about enough productivity boost and revenue boost in time to justify the significant spend? I think the jury is still out there, and for now, the AI theme continues, which is why we're overweight.
Well, you mentioned, you know, hyperscalers there. You must have been particularly focused then on this report that Oracle's cloud margins are lower than expected and may even not be there really at all. How much did you investigate this, and how much does it give you concern about the other hyperscalers?
Well, what we have seen is in aggregate, their cash state is quite healthy and their earnings have been coming through. But it's important to be selective. Of course, you know, you talked about Oracle, but within Magnificent Seven, we got to be selective as well. I think pay attention to fundamentals to understand if their capex activities are being funded out of free cash flow, or if they are having to leverage up, or if they are having to think of creative ways to fund them is important, and which is why this is really an environment of winners and losers, and being selective is key.
You know, Wei, those who are skittish about this market would say we've pulled forward flows that we would normally see during an easing cycle. Now, one of the pillars that your thesis rests on is that this easing cycle will keep these flows coming. But if those flows are being pulled forward, well, that won't happen, will it?
Actually, there's a nuance to our pro-risk thesis. So right now, we do think that the Fed has macro cover to continue cutting. And by macro cover, I mean the weak labor market, monthly job creation, especially in the absence of the release of NFP. We're having to rely on some of the private market payroll, ADP, and jobless claims and all of that. But the big picture very much shows that we're still in this no hiring, no firing status, and that actually support the Fed to continue cutting rates. So this year, markets are looking at 2 more cuts. We agree, but the nuance here is that markets are taking policy rates to 3% by the end of next year. That I am not sure about, given the inflationary pressure from the service part of the basket, but also think about feed through from tariffs as well. But for now, I would say the combination of Fed cuts continuing and AI momentum continuing supports our pro-risk view.
There's so much going on in all corners of this market. I have to ask you about Japan right now. We are seeing the yen very close to 153 this morning. 152.94 is where it's trading at. Do JGBs continue to take the brunt of this? Will we see verbal intervention? And at what point will we see actual intervention?
While there's a lot going on in Japan, there's a lot going on in other parts of the global bond market as well, in France, for example. And I think that they all paint a picture of kind of fiscal tension facing off to bond market. So we have had an underweight in JGB, long duration Japanese government bond for a while, and this has really been paying off. And we do think that there is room for Japanese rates to push higher, both in terms of policy rates, because we're looking at one more hike by Bank of Japan cautiously, but in that direction because of the inflationary direction of travel, exiting decades of deflation. But there's also room for kind of term premium to reprice as well. So we keep our underweight in JGB. We keep our overweight in Japanese equities because the fundamental story of domestic reform somewhat also accelerated with the LDP election over the weekend in terms of hopes and expectation continue to power the markets ahead. So preference for Japanese equities, funding that out of underweight in JGB market.
Well, we have to leave it there, unfortunately. There's so much that we could talk about, but that is Whaley of BlackRock, and thank you. Coming up, blocking back pay for furloughed workers. More on President Trump's latest shutdown threat next. This is Bloomberg.
There are some legal analysts who are saying that that may not be appropriate or necessary in terms of the law requiring that back pay be provided. So I'm sure that'll be there will be a lot of discussion about that. But there are legal analysts who think that that is not something that government should do. That, if that is true, that should turn up the urgency and the necessity of the Democrats doing the right thing here.
President Trump then raising the stakes in spending negotiations with Democrats. The White House's budget office has drafted a memo that says some furloughed federal workers are not guaranteed compensation during the showdown. For more, Bloomberg's Suzanne Lynch is back with us. Suzanne, presumably there would be some kind of legal challenge, and this would be very unpopular. Is this wise on the part of President Trump and Republicans?
Yes, already we've seen unions representing workers seek to sue preemptively about anything that might impact the pay of federal workers during a shutdown. But what's very interesting here politically now is that there seems to be some light between what the White House is saying on one hand and what congressional Republicans are saying on the other. As you heard there from that clip from Mike Johnson, the House Speaker, there are concerns about the legalities of this, and a lot of Republicans in Congress are also worried about this. They don't think that this is necessarily a good idea, a good look for Republicans when the government is shut down for now a week, that the president is threatening to perhaps not pay the back pay of workers who've been furloughed. Now, this is all coming from the office, the budget office, as we heard there, a memo that the budget office has been prepared as it seeks to kind of winnow out perhaps more workers from the federal workforce. But undoubtedly, I think Donald Trump is going to get a lot of pushback from his own Republican Party on this issue.
Suzanne, in the EU, we saw this morning that new trade demands are hollowing out deals struck by Donald Trump. This is the complaint that EU leaders are now putting out there. This is, with regard to the 15% tariff ceiling that the bloc had hashed out with President Donald Trump. What are these new demands, and is the whole thing in jeopardy now?
Yes, look, this is a very worrying development from the perspective of the European Union. EU ambassadors are due to be briefed by the European Commission today at a meeting. And really what we have reported in the last half an hour or so is that there are now real concerns here that the demands being put by the US side are in danger of hollowing out that agreement that was struck between Donald Trump and the head of the European Commission, Ursula von der Leyen, back in July in Scotland. In particular, the US is raising concerns about digital regulation. This has always been a bugbear for successive US governments. The EU has quite a lot of power when it comes to regulating big tech, and it's got a number of flagship laws known as the DSA and the DMA. Now, so far, the EU has said consistently it's not prepared to change those, but we are reporting that the US is looking for some concessions on this. Also, the US is concerned about any climate-related laws and restrictions that might impact US companies. Right. So, as we say, EU ambassadors will discuss this later this afternoon in Brussels.
That deal rearing its head again. Suzanne, thank you so much. Suzanne Lynch there. Meanwhile, in the Middle East, teams from the US, Qatar, Israel and other nations headed to Egypt as part of a final push to end the war in Gaza. The US team includes Special Envoy Steve Witkoff and President Trump's son-in-law, Jared Kushner. Joining us now is Bloomberg Middle East reporter Carla Canivet. Carla, any positive signs on what the talks may bring?
Hi, Vani. So I think the word for today where we're at is cautious optimism. I think that once we see people such as Witkoff and join the talks, this usually is to be understood as there is a little bit of progress, even if we are, I believe, still far away from getting a full peace deal that we would say would end the war. But the fact that that more senior negotiators are coming into these talks, which have been happening since Monday, since the start of the week, it is to be understood that at least the conversations are serious, which is something that Israel had said when it started, was we will accept talks tentatively to understand if Hamas is serious about conversations. So I think it is to be understood that they are deemed to be in a serious place. So what we will see now, the negotiations are going around the idea of where the redeployment of troops for Israel will happen, what the hostage exchange, how the mechanics will happen, even what happens first and what goes next. So those are some of the things that they will try to iron out during these talks.
Well, the fact that they're getting into the weeds is optimism enough for now. Bloomberg's Carla Canivet, thank you so much. We do hope to get a new update from you soon. Now to a Bloomberg scoop. Elon Musk's startup xAI is raising $20 billion to finance AI chips, tapping backers including Nvidia. Joining us now is Matt Bloxham of Bloomberg Intelligence. So it's a $2 billion portion, the equity portion that Nvidia is promising here. Compared to the types of numbers we've been seeing thrown around, it doesn't seem to be that huge. Could it even be called reasonable potentially as an investment, Matt?
Yeah, I mean, I think time will tell whether it's reasonable investment. But yeah, as you said, it's like a small number compared to some of the other deals we've seen Nvidia doing. And I think it's kind of, fairly typical of what we're seeing Nvidia try to do to kind of stimulate and expand the AI market and make sure that the big players in that market are using Nvidia chips. We've seen them make equity investments in a lot of companies over the past few years, and obviously the most recent big deal has been the deal they did for $100 billion with OpenAI. So it makes sense, but it kind of connects to this kind of larger discussion we've been having around circularity in a lot of these investments, and whether the real end market can kind of ultimately catch up to make some sense of these deals in the midterm.
Yeah, just on that narrative, I mean, some would say it sort of leaves a bad taste in the mouth, but others would say it's just a form of vertical integration, Matt. What would you say? Are both possible, maybe?
I think they are, yeah. I mean, I think I tend to kind of side a bit more with the, the kind of slight, kind of discomfort with the circularity. And as I said, really what we need to see in the mid to long term is the natural demand come through. How are they going to commercialize the consumer market for AI? How are they going to commercialize the enterprise market for AI? And there isn't a huge amount of revenue from those markets yet. Most of the revenue coming into the AI market is actually from kind of startups and venture businesses that are kind of really starting to try and create this market. So there are question marks. I think you see investors look a lot at the cash flow of some of these companies, particularly like Nvidia, to see whether we're seeing a widening gap between what they report as revenue and profit and what's coming in as cash flow, and making those numbers add up and make sense.
Matt, bring us up to speed with what's going on with ASML. Shares dropping today, a US probe into China exports apparently.
Yeah, that's right. So ASML is the leading provider of lithography equipment, which basically is what you need to make chips, and they're a big supplier to TSMC. There's obviously been a lot of crackdowns on technology being sold to China, and ASML's already been part of that, but there's a big report coming out from a US select committee that actually the amount of technology being supplied to China by ASML and a number of other high-tech companies is bigger than they had originally thought, and that perhaps maybe leads to further crackdowns coming on the likes of ASML and how much they sell into China. Now, for ASML, last year their figures reported that about 40% of their revenue came from the China market, so a big chunk of ASML's revenue. So there is a question mark there, but they're already subject to constraints. So maybe the kind of fears are already priced into forward estimates for the company anyway.
All right, Matt, we'll be watching how those shares trade throughout the sessions. Matt Moxham of Bloomberg Intelligence there. Coming up, more Fed Speak and Fed Minutes on deck. In your day ahead, this is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for your Wednesday. A slew of Fed speak coming from Musselman, Barr, Goolsbee, Kashkari. That's all throughout the day. The Treasury is going to be auctioning $39 billion worth of 10-year notes at 1 p.m. Eastern. It'll be interesting to see how that goes down. And then the latest Fed minutes coming at 2 p.m. Eastern. We'll see if the Fed has as much complaining to do as the Bank of England, which came out with its minutes just a little while ago, and there were a lot of concerns in those minutes. Let's take a look at some macro movers, because it seems like we have risk on, safety on, and why can't we have it all after all, right? So after yesterday's little breather where we saw the S&P down 0.4%, we see futures higher again today, not just on the S&P, but also on the Nasdaq 100, which dipped more than 0.5% yesterday. The Bloomberg Dollar Index is stronger by another 0.25 percentage point. I want to point out that the yen is within a hair's breadth of 153. The euro is within a hair's breadth of 116. So that's the story there for the US dollar. Gold up another 1.5%. We are absolutely pummeling through the $4,000 mark. We're up to 4,050. Let's take a look at some other signals this market is sending out. The VIX was above 17 for much of the day yesterday, down below 17 once again today. The 10-year yield trading pretty unchanged at 411.13, and Bitcoin has started to take off again. Make of that what you will. So that's what the macro picture looks like. Lots on deck once again today. We'll see if this holds throughout the session. But that's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.